Good afternoon, everyone. Welcome to the third webinar in this free webinar series hosted by the University of the West Indies and the Center for Professional Development, Lifelong Learning for Lifelong Earning. I'm Sonia Mahan from the University of the West Indies, and I will be your moderator this afternoon. The purpose of this series is to expose those of you who are joining us to some tools that we are certain will prove useful to recenter, re-equip, and to allow you to reimagine your professional and personal futures. Before we get started, let's establish some of the protocols for today's webinar. For the duration of the webinar, each of you will have your video disabled and your microphone will be muted. It will be in an interactive session, so we encourage you to use the chat facility to the right of your Zoom toolbar to engage with us and with our presenters. Should you be experiencing technical difficulties, do let us know through the chat facility as well. To get the best viewing experience this afternoon, I recommend that you select the speaker view so that your image is focused on the two presenters that we're having this afternoon. Today's webinar is going to be about auditing analytics, and we have two presenters with us today from across the pond, Dr. Terry Harris and Dr. Amir Michael. So a little bit about our presenters. First, Dr. Terry Harris. Terry is an assistant professor in accounting at Durham University's Business School, Durham University, the UK. He received his bachelor's degree with a double major in computer science and accounting from the University of the West Indies Cave campus, right with us here in 2009. Since that time, Terry has successfully completed his MPhil in computer science, a professional accounting designation with the Association of Chartered Certified Accountants, and he has his Doctor of Philosophy in Finance with Durham University. Terry has taught extensively in accounting and finance and has incorporated many active learning strategies into his teaching. All told, Terry's teaching has been of a high standard as evidenced by his excellent teaching evaluation scores, which average consistently above 4 on a rating scale of 1 to 5. Terry has engaged in theoretical and applied research, publications, and scholarly and professional activities. In particular, he is published in Association of Business Schools, rated internationally leading journals. Furthermore, he has presented papers at international conferences and is reviewed for top-tier academic journals. He's also a chartered accountant, a member of ICAB, the Institute of Chartered Accountants of Barbados. So he's joining us, like I said, from the UK for today's seminar. Dr. Michael Amir is an associate professor in teaching and accounting, also at Durham University Business School at Durham University in the UK. His research and teaching interests have been fostered by several years of undergraduate and postgraduate teaching and mentoring at Durham University, Arab Academy for Science and Technology, and Alexandria University. As program director, Amir has been instrumental in the development of the BSc in Accounting, KPMG, ICA EW School Leavers program. This innovative program has been mentioned in comments and cited in the Government Education White Paper as an example of good practice in higher education and the highly influential Wilson Review of Business University Collaboration Report to the Government of the UK. Amir's teaching philosophy reflects his interest in collaborative authorship, preferring student-centered teaching that encourages learning by students and teachers rather than traditional teaching. Amir is interested in sharing his research with students, which facilitates applying the research-led education approach that is the cornerstone of Durham University. So again, a warm welcome to our presenters this afternoon, and I'm going to turn it over to you, Amir.
Hello, everyone. Thank you very much, Sonia. It's really a pleasure to be with all of you guys today. As Sonia mentioned, I work for Durham University Business School about 14 years now. Got my degree from Durham as well. So what I'm going to do today is give you some kind of insights of more of a contemporary topic, which is analytics in the audit context. So let me first of all start my presentation with a video to set the floor for the presentation in a form of a context of what we'll be covering today.
Lucy, how's it going?
Hi, Hitesh. I've raised the issue that KPMG Clara identified overnight with the Lacuna CEO, Charles Callan. He agreed something's not right and we need to investigate.
Oh, does he think there's a risk?
He's certainly concerned. He feels like sales growth in New Zealand may not be sustainable.
Okay, well, I'll look into it and then I'll get Clara on it as well.
Okay, great. Sounds good. I'm heading into the office now, so I'll catch up with you when I'm in.
Okay, I'll see you later.
Hello, Hitesh. How are you today?
It's about to get very busy, Clara. Okay, so we need to do an analysis on the risk you flagged overnight on Lacuna's New Zealand subsidiary. So can we pull all of this data together, please, so that I can assess and make a file note? Okay, so let's start with financial and employee data, brand and market metrics.
Then benchmark against the wider group's data?
Oh yes, and peer companies. Clara, can we just expand on these figures here, please? So this seems to suggest that there's a fraud underway and that they're misrepresenting sales in New Zealand. I think we need to brief this in.
I'll set up a meeting with Charles and Lucy.
So, as you can see, sales have grown 20% in a stable market, customer dissatisfaction is a growing social media trend, and people attrition is up 40%, particularly in finance and customer support.
It doesn't look good. I'll need to notify the board. But please go ahead and organise a deeper dive as part of the ongoing audit.
Will do. We need to assess the situation on the ground. I'm going to send in our fleet of drones to review activity. And Charles, I'll need to conduct interviews with key executives.
I'll arrange that now. And thank you.
Okay, so I'll get on to those interviews. And Clara, once they're done, can you review the data and drone footage overnight?
Of course.
Hitesh, can you reach out to Laura Schmidt, our fraud specialist, and get her to help identifying the extent of the fraud and who else may be involved? And Clara, can you review all communications, emails, instant messages, any relevant documentation, and pass it on to Laura as soon as it's done?
Uploading data now.
Let's catch up in the morning, once Clara's processed the information.
Okay, no problem. I'll see you there. Morning.
Morning, what have you found?
Well, our drones can see that inventory isn't correlating with their claimed customer orders. So sales are being booked, then fraudulently reversed to bolster performance. And Clara, there are signs that it isn't just the sales teams that are involved when the fraud occurs. Is that correct?
Yes. Consistent leaving times, coded email language, and how they behaved in their interviews. There are clear correlations.
We have a significant fraud. I'll get in touch with Charles. This could be a big exposure for Lacuna.
Well, at least the board can proactively deal with it now. And Clara, can you model the financial implications to give Lacuna a prediction as to where this leads them?
Of course. Uploading data now.
So, in conclusion, without additional capital, our team predicts the New Zealand business would not be a going concern, particularly now as it has a bank covenant issue.
Okay. Lots to think about. Thank you, Lucy, Hitesh, for identifying this and your prompt action.
Thank you, everyone. As you've seen in the video, this is what we expect audit will be looking like in 2023. This is following KPMG strategy. So what we're going to be talking today about this system is just to understand why these systems are there, how they help the audit, and how people engage with it. And that's the key thing I'm trying to cover today. So I'll try to get you to understand how these things work and why they might not be working. So I'll just share my screen again, show my presentation for today. So the topic is simply about data analytics and improving the quality of audit. So in the UK, we've been through different phases of how to implement audit analytics. So the first stage, there was a report came from the FRC, which is Financial Reporting Council, which is like the watchdog or the regulatory body in the UK to oversight any audit practices. And then there was another report came from the ICW, which is the Institute for Chartered Accountants in England and Wales, again trying to encourage firms and auditors to implement data analytics in the external audit. And finally, there was another recent report came from the ISP, which is the regulatory body which released the international reporting standards and the international standards of auditing. and they were trying to encourage using technology in general and data analytics specifically in audit practices. So this is where the UK or even Europe in general trying to encourage auditors, firms to incorporate analytics or technology in the audit processes. So moving on with the rest of the big data. What do I mean by big data? It's about what we call the 5 V's, which means that big data is a very, very huge in volume. It's having huge velocity, which means it's moving all the time. It's having some variety, and that's one of the key things. It's not just about numbers. It's more about other text, photos, videos, and you've seen from the video, we're not now considering just numbers. We're considering behavior. We're considering language. We're considering the tone of the emails, the tone of the messages. All these kind of things need to be taken into consideration. So talk about a variety of information. But at the same time, these data might have some question marks about whether they're credible or not. And this would raise a question about veracity, whether the data really true or not. And you can see the lots of things on social media, for example, which you cannot tell, is this post true or not? So we need to be careful. And that's one of the drawbacks or challenges we face when dealing with big data. And the final V is to add value, which means that there is a value add of doing all of that. I mean, we need to be aware that technology is expensive, not just in terms of infrastructure, but in terms of the intellectual training requirement to cope with this data. So if you look at where is big data in the world, there was a report came from McKinsey of what they expect that big data will spread over the world by 2025. And you can see that the first item, which is having the major influence of data across the world, is mobile internet, which is interesting that the number 12, which is the least technology or the least area which use technology, is renewable energy, which is interestingly that's why most of the government, most of the world now, including United Nations, is trying to put lots of emphasis on renewable energy because they'd like to get it in line with something like cloud or mobile internet or Internet of Things in terms of using or utilizing technology. So what are disruptive technology and how we can relate them to business? Something we apply is called robotic process automation, RPA, which is simply trying to make the process automated, which means reduce the time and the effort required to enter data, for example, to the system, or to analyze the data. So as you've seen in the video, it's more about the data's there, it just the system will recall the data and not just bring you long reports, as sometimes some people might be feeling bored to read them, but it's getting you some insights that you're looking for. So here is more about bespoke analysis rather than full analysis for something you might not be interested in. Same idea with blockchain and smart contracts and how we audit that. And one of the arguments that given that we're having blockchain and smart contracts, why we need audit? So some arguments here that audit will be minimal with smart contracts. In other words, when you use technology, the role of audit will diminish a little bit. And I'll go back to this point later. Of course, other issues like artificial intelligence, virtual reality, deep learning, Internet of Things, all these are hot topics which are related to integrate technology in business. And the other thing as well is using social media. Remember, when we're talking about the veracity of data, the social media might have an influence. So for example, if you discovered like sales for some organizations are going down, and this is some of the firms in the UK found that when they went to the social media like Twitter, they found some trends and patterns, like a strong trend for hashtag about customer dissatisfaction about this company in certain year, which if you link it to the numbers of sales are going down, so that makes sense. So here you're trying to understand why numbers behave in a certain way by using some contextual data from social media, and it works on many occasions. Cloud computing, again, given what we are now in COVID-19, we all use cloud at the moment, and there's lots of emphasis now on cloud. And imagine if we're not having the cloud at the moment. So you can imagine how many servers we require in order just to facilitate sessions like this one. So you can tell it's challenging and how cloud computing made our life easier to do that. And lots of organizations, lots of higher education institutions, lots of professions coped very well with the COVID-19 issue, relying heavily on the cloud computing platforms. And finally, e-commerce. Given that most of people are in lockdown, e-commerce was essential because everyone can order anything while they're at home. So again, e-commerce plays an essential role. I don't say that these kind of things been when they've been designed for the purpose of facing COVID-19, because nobody was imagining there will be COVID-19 at this stage, but it happened. And this is showing that technology can even accommodate some of the areas or some of the issues we didn't even think about, like what we are now in the COVID-19 issue. The research I've done, actually, if you remember the video cloud about Clara, KPMG, I've been involved in that with a team from Clara team in KPMG UK. I'm having a very good link with my colleagues in Durham University Business School. And we're trying to understand how Clara can be implemented and what are the challenges. So we looked at, will data analytics represented by the Clara, which is the software they use, can enhance audit quality? And will real-time or continuous audit aided by Clara or data analytics can improve audit quality? So those are the two questions we're trying to ask. In answer to this question, we're trying to look at three areas. We're looking at willingness to use data analytics. We're saying, are all auditors, are all partners, are all managers in firms like KPMG or PwC or EY or Deloitte, which are the big four firms, willing to use data analytics? Are they recognizing the importance of data analytics? And will they require sufficient training to use data analytics? So those are three major questions we're trying to ask everyone in the organization. And we've done this research across big four firms in the UK. So what we found here, we've done a questionnaire, like a survey 5-point Likert scale. The questionnaire was self-administrated, delivered and collection, which means we send it via email. We're trying to chase people to get the data out of them. And we run about some interviews, like with 3 members of the big four who work with data analytics. 2 of them worked as senior readers of statutory audit or the regulatory audit services. The data, just to give you a context, who responded to this data, simply we had 80 auditors. We sent the data to 80 auditors, 30 of them responded. We sent it to analysts in big four firms, 50 questionnaires, 23 of them came back to us. So in total, we had 53 responses. And of course, they were saying that they're balanced between people who are having qualifications, and technically can see those mainly the people who are working in audit, and some are not having audit qualification, but they work in the data analysis departments. And in terms of experience, there's a variety of experience, but you can see here is between 3.6 and 5.1 years, an average 4.5 years. We thought this is a contemporary topic, so we need to make sure we're not asking someone who's having 20 years old, because it's going to be biased, because this person will immediately say, you're going to shut us down. I'm not interested. I don't know what you're talking about. So the reason we looked at this age group in order to ensure that people are engaging with the process of investigating the purpose of these data analytics and the barriers. The results are around 8 attributes. We call them 7, attributes. Is the comfort of using data analytics, improvement, how it's going to improve audit, how you can use analytics, how you can understand and be aware of such analytics tools like Clara, what is the role of regulations, importance of analytics, and finally the quality, how that's going to improve quality. And those are what we call the attributes of data analytics. We call them attributes in this case. I'm not going to go through the results, but I'd like to point out some areas. Like, for example, we're talking about feeling comfortable relying on data analytics and audit evidence. Of course, analysts were very comfortable, but auditors were not 100%. They are saying we agree, but they're not 100%. But if you look down on one of the areas which is really striking, when you feel comfortable relying on data analytics results from overseas assistant because you know that they have been thoroughly reviewed. Analysts saying, yes, we agree, yes, we trust, yes, we're having comfort on this data, while auditors saying, no, we disagree, that having data audited by someone else, we are using data analytics will make it more, will make us more comfortable with that. So here is a very interesting that the difference is significant between the two groups. The stars mean significant between the two groups. And this shows that there is some resistance from auditors towards using this type of analytics. If you go to the next one, which is importance of using analytics, the results were almost the same between both of them. Both groups are in general in agreement that using analytics is important. So interestingly, that between the analyst group and the audit group, they also understand and they say, yeah, it is important. But there is an issue here about whether it's going to improve audit. Yes, it will improve, but some of them saying, yes, it will improve, but we have some reservations about that. When you looked at the quality, again, all of them in agreement, it will improve quality. When you looked at the regulations, all of them, they're saying, yes, we need regulation, but there is one interesting question here. You don't feel comfortable using data analysis in audit because there are no specific regulation regarding the use of audits and audit. Both groups agreed that not having or regulations or lack of regulations trying to govern the use of technology in audit might be an issue. And that's why we took these results and went to the FRC and other regulatory bodies in the UK to tell them the result that you need to do something about regulations because people are not feeling comfortable using such regulations, such analytics without regulations. Awareness, again, there are lots of things here about it, but I'll point out one question, which is training provided by your firm enables proficient use of self-service and data analytics tools. They both disagree. So interesting, we're talking here about big four firms, which are the firms having most of the resources in the UK in the audit profession. And they all disagree that there is appropriate training. And that gets us to my point at the end that training is crucial and we're having lack of training in this area. Usability, they're saying usability is important. Again, you use data analysis on your credit clients, on your audit clients, sorry, and are planning on using them on future audits. They agree on that. So there is a clear willingness. There is a clear appreciation of audit analytics, but there is a lot of concern about how to use them. So trying to look at, okay, what are the barriers? If all of you agree that analytics is fantastic, analytics is a good thing, what are the barriers? So looking from an analyst point of view and looking from an auditor point of view. One of the things on that, if you look at the data analysts, we have 12 people or 12 of the analysts say that resistance to change is a big problem. And resistance to change here, not from the analyst point of view, but from the auditor's point of view. They think they are resisting it. And that's linked to the first barrier, which is culture. So saying, in order to implement data analytics, you need to change the culture and you need to provide some kind of mitigation of this change because people resist it. So that's in a nutshell what we advise them to do. From an auditor point of view, you can see what is the main barrier is understanding. And actually, one of the things they're saying, and training and change as well, because they're saying, I've not been trained to use analytics in my audit assignments. I'm not used to use footages. I'm not used to use drone footages. I'm not used to use face recognition when I'm doing my audit analytics as an evidence. I'm not used to do these things. So here there is an issue about understanding. Again, training came very strong. So these are some quotes because we have done some semi-interviews. So one of the interesting quotes here came when we do client acceptance process and define checks, we use analysis data and AI to help to see what are the risks is what tackling on the client. So there is some areas where they use AI, some areas use analytics, but not on the scale we were looking for. So in conclusion here, just to trying to understand what's happening is, first of all, auditors need to be massively upskilled, not only to be able to use analytics confidently, but to be able to extract and verify which data. And here when I'm talking about data, people forget an important aspect when we use numbers. So historically, we use numbers to explain certain behavior in a more quantitative and objective way. And people forget that it's not just about numbers. Numbers on their own might mean nothing, but the context is important. And the context might be in form of data, where there's pictures. For example, one of the things we're using now is when you get the annual report, most of the big organizations like Microsoft or Apple, when they release the results, they make a media conference. And one of the things we're looking at is the body language of the CEO or the CFO when they release the results. Some of them are nervous, some of them very confident. And we'll begin to look at when Enron, for example, or WorldCom or Lemire Brothers release their results. You go over the years, the videos are on YouTube. If you'd like to do this exercise, you can go to YouTube and check them. You can find the body language from one year to another. Sometimes it's a bit confident. Talking about Lemire Brothers, sometimes get to be more aggressive, sometimes be more hesitated, sometimes be more nervous. So these kind of things, when you release the numbers, can tell you, yeah, the numbers are saying something, but the body language of the person who's presenting the numbers telling something different. And here comes the role of linking everything together. It's not just about the numbers, it's about the context. So auditor need to gain some confidence about the tools, and this is a long way we need to go through training, providing some kind of, first of all, orientation, what data analysis can offer, what it cannot offer, and then implement some training, some education, and so on. Change in the culture need to make data analytics or digital technology part of the culture. It's not an add-on, because at the moment, even with KPMG, you've seen the video here and see, yeah, wow, that's advanced. Still in the culture, I mean, I can tell there's a lot of resistance. It's not yet in the culture. When it comes to say, Clara, let's use Clara, I can see lots of partners mooning about it. They don't want to do it because they don't understand it and they feel nervous about it. While others are like more younger auditors, they're very confident. Yeah, let's do Clara, let's use Clara. It's very interesting for them. So that's a cultural aspect. Regulations, I think in the UK, when speaking to people, I've done a presentation last November in the US, and we compare between the regulations in the US and regulation in the UK regarding data analytics. And interestingly, I've been told the UK is very open to that. I told them, yeah, we're very open, but we need to do more than baby steps. At the moment, we're having baby steps. We need to go further. And actually, that's the challenge at the moment for implementing technology. Using data analytics, my view is to begin with internal control. And again, one of the things myself and Terry are working on is we're investigating internal control systems of the health services sector in the UK and see how we implement data analytics in internal control system, because internal control is fortunate because it's not having lots of regulations. You can do whatever you like because it's your own organization. And as long as you use it for internal purposes, you're having this kind of freedom. While on the other hand, if you're an external auditor, you're very strict by what's been dictated by the standards that you need to comply with. So again, it's as if you like to have a step and to implement and have a trial and error without massive disasters, I think internal control would be the venue to do that. So my final point here is diversity. Of course, pool, you need to be how to develop education to diversity of the course pools, to have some kind of special seminars like the one we're doing now, partnership with businesses, and this is thing which is very important. Is not, I don't think academics on their own can do everything. You need to work with businesses. So myself and Terry will run a module. We're having partners on it, having Tableau on the program, on the module. We use other companies like Stata, MATLAB, and other organizations. We're looking at NVivo next year. So we're having some partners from practice to do these kind of things. We cannot just do it as academic. So the interesting thing about these programs or these educational sessions, it needs to be merged between academia and the profession services as well to help to get the target, get the objectives clear and loud for everyone. We need to use new tools again, like Hadoop, IDEA, Python, or Tableau. They're really crucial now for data analysis and data visualization. We need to embrace lifelong learning philosophy. Again, data analytics in general is not something you're going to learn and come out of it. Okay, I know that analytics. It's an ongoing learning process, because every year, I mean, I still remember when we're doing things with Excel. Now we're doing it with, and then we moved to SPSS and something called PCGIF for those who are old enough can recall the PCGIF thing, which is a very old CD. You get it, and then you move to Stata and SPS and Python, and then moving at Tableau. It's ongoing service. It's not just you learn everything from one session. It needs to be contextualized technology. You need to understand why you'd like to use technology and how to use it, and that can be done online or a course or whatever you like to do it. It's up to you really how to cope with this agenda. So it doesn't mean that you need to go back to university and have a full undergrad program, but you can do it on an offsite, and lots of programs now, lots of universities offer short courses will give you this insight you'd like to get. Right, so I'll just open the floor very quickly, if I'm having time, to any questions before I hand over to my colleague, Terry. I'll stop sharing here.
Thanks so much, Amir. For those in the audience with us, if you do have any questions, remember you can post them to the chat facility, and we will engage with Amir and Terry as your questions come through on the chat site. Amir and Terry, no questions so far. So Terry, I think you're up next.
Thanks, Sonia. Thanks, Amir. All right, so good afternoon, everyone. So I'm Terry Harris, and I'm going to be presenting on the topic, big data analytics in auditing, accounting practice, and education, essentially discussing the implications that big data analytics have for our profession, accounting and auditing. All right, so what is big data analytics? So Amir would have done a good job of alluding to it before. So big data analytics simply involves the processing of a large amount of facts about the world, right? So he outlined these 5 V's before, a large amounts of data, and trying to process this data into information with which we can make decisions, gain insights as accountants and as auditors, right? So that's what big data analytics is all about, just tools to process large amounts of data to make decisions, to garner information. All right, so also as Amir has pointed to, so it turns out that unfortunately, our profession, auditing and accounting, has been slow to pick up these big data analytic techniques and slow to apply them in practice and in education. So it turns out that this is the case. And one plausible explanation for this being the case is that auditors, accountants, and the educators of accountants and auditors are reluctant to adopt techniques that aren't already adopted by their clients and by the wider practice. So there's this conservative mentality within our profession, which is a good thing generally, but it also means that we are slow to adopt certain new technologies, which turns out to be very surprising, specifically in the case of auditing, because auditing was on the forefront of adopting analytical techniques in years gone by. So auditing very early on adopted and helped to develop the random sampling techniques. So auditing was well ahead in terms of these type of analytical techniques, and and we're falling behind. But here we go. All right, so this is so we don't do it. All right, but there are some easy low-lying fruit, some easy areas in which we can apply analytics, big data analytics, to audit and to accounting. But I'll talk about audit first. So in auditing, we're required to evaluate the firm for going concern. So we have to make going concern evaluations, and auditors could use big data techniques to forecast financial distress in the firm. So you can develop a technique that predicts or seeks to forecast whether a firm is going to experience financial distress. Of course, you would build this model from a historical data set of firms that have experienced financial distress and those firms that have not experienced financial distress, and then evaluate the firm that is currently before you. This type of a model, this type of an approach could help to improve the going concern evaluation requirements that are required in audits, right? So going concern considerations, develop a model to predict or to forecast financial distress and use it in practice. This could help to support the going concern evaluations required in audits. Another area where big data can help is to improve the quality of audit opinions and to enhance auditor independence. So incorporating big data models could help to avoid the costly error that is associated with, and the very embarrassing error that is associated with issuing unmodified opinions immediately prior to a firm going bankrupt. This actually happens. So auditors seldomly, very infrequently, but it does happen, issue unmodified, sometimes even unqualified opinions right before the firm goes into bankruptcy. This is, of course, very embarrassing for the individual auditor and for our profession and accounting more broadly, right? And this is found to be a particular issue in small auditing firms, so the non-Big Four firms, early on in their audit engagement. And the thinking here is that such firms, at least in the literature, the thinking is that such firms may be reluctant to issue these modified opinions early on in the engagement for fear of losing the client in the future. If this is the case, then if auditors were to rely on these models, big data models, that go to assess the going concern in particular of the firm, and use these models to generate more hard data and information to provide the client, then maybe you can convince the client that that the opinion really is justified, and thereby enhance the independence of the going concern evaluation. So this is another area. So it can help to improve auditor independence, help small auditors in particular to justify their opinions to their clients, and thereby improve their independence and retain the client, hopefully. Sorry. All right. Auditors are also required to give reasonable assurance that the financial statements being presented are free from material misstatement, whether due to error or fraud. And here again, we can rely in the auditing profession, we can rely on big data models to help to predict financial statement fraud and to help to predict earnings management. So auditors can develop these models. A lot of the information is out there. The financial statements are publicly available for those publicly listed firms, well, in the United States and in the UK. I'm sure you can get financial data for publicly listed firms in Barbados, although I'm not sure exactly where. So this information is available, and you can develop models based on this historical data set that seek to predict financial statement fraud and earnings manipulation, right? And thereby give the auditor some reasonable assurance that these statements that are being presented are free from material misstatement, whether that misstatement is due to fraud or some material error. So it can help to improve the reasonable assurance. And finally, with regards to audit, big data techniques can be used to help. Amir would have alluded to this before as well. Big data analytic techniques could be applied to conduct textual and in particular sentiment analysis that on text that surrounds the firm. And these texts could comprise either the disclosures of the firm themselves. So it turns out that sometimes when managers and those charged with governance are making misleading financial statements, they tend to use overly positive sentiment, very colorful language to manage impressions of the financial disclosures. So if you conduct a sentiment analysis, textual analysis, sentiment analysis on such financial disclosures, you will be able to detect whether there's a substantial change in the net sentiment or tone of the statements, and thereby this might be indicative of fraud of some nature or some sort of misleading statement, an attempt to deceive. Also, negative sentiment conducting textual analysis on things like the online news articles, social media. Amir would have alluded to this before. Negative sentiment there could be a source of risk for the audit and can influence a risk-based audit, right? So for example, consistent negative sentiment about a product could cause auditors to evaluate the sales returns and allowances account for this product, and also evaluate the warranty claims that are associated with the product. Right? So negative sentiment about a particular product online, on Twitter, on Facebook, wherever, if you're able to capture that, then that can give you some insight into a product that might be failing. Also, online sentiment, negative sentiment about a client might influence the auditor's decision to either engage with or continue with a client. So it could influence an auditor's opinion about whether they should actually undertake an engagement. Why would you go and conduct an audit for the next Carillion? So Carillion is a big firm in the United Kingdom that recently failed. If you're a small audit firm or a large one, you really wouldn't want to be associated with that. And finally, and probably more troublesome or interestingly, you can conduct a sentiment analysis. Auditors could conduct a sentiment analysis on the firm's emails. And if there is a massive change in this net sentiment of emails, from say positive to negative, then this also could be indicative of some internal control failure or fraud in the firm. So there's some very low-lying fruit where big data analytics could be applied immediately in audit. And this is where we think the profession should be heading. So what about accounting? So there are a number of areas in accounting where big data analytic models could be applied. So big data analysis can be applied in accounting in a number of different areas. My pet area is for the expected credit loss provisioning. So this is my favorite area in accounting to apply big data analytic models. So such models, big data models, could be developed for credit scoring and also to help estimate expected credit losses. So credit scoring involves the use of big data models to essentially evaluate whether a credit applicant is good or bad for credit, whether they're creditworthy or not. So we can apply models to determine whether a person who wants to be extended credit of any sort, so this is accounts receivable, or if you're a financial institution, whether you're going to be extending a loan to the individual, whether you want to do that or not by developing credit scoring models. Equally and related to this is you can use such models, big data models. These could be applied in conformance with International Financial Reporting Standard 9 to more accurately estimate the expected credit losses, essentially bad debts expense, and therefore the expected credit loss provision. So we can apply such models for loan loss provisioning or for provisioning due to expected credit losses more generally. But, and there's a big but, as Amir has alluded to before, auditors and accountants that use such techniques, such more advanced techniques, need to understand them. And we have observed in the profession, as Amir has pointed to, that there's maybe a lack of training in this area. Well, not maybe, there is a lack of training in this area. Also, we've surveyed our students. So we did a survey back in 2019 survey of our students. And at Durham, we have essentially two categories of accounting students. We have pure accounting students who are regular undergraduates. They take the BSc in accounting and finance, while our professional students, or KPMG students essentially, they take the BSc in accounting. So at Durham, we have a special program, an accounting special program, whereby students come and take 1 year with us, and then they go off and spend 2 years working at KPMG, and then they come, well, Amir can correct me here, is it 2 or 3 years? Oh, I think you're muted. And I think,
yeah, it is 3 years as a start, which is part-time,
right.
And then 1 year full-time.
Right, okay, right. So they come back to us, and thanks, Amir. And so they've had this professional auditing experience, and we essentially finish them off in their final year. So we have some regular undergraduates and some professional students that we teach at Durham. And so we've asked both cohorts some questions back in 2018-19. And the first question: how important do you think data analytics to be for your future? Across the piece, on a Likert scale of essentially 1 to 5, our students believe that it's very important for their future. We also asked our regular undergraduate students whether they think their course offers opportunities to learn essentially data analytics, and the sentiment there was, the response was generally no, we don't really learn this stuff. And the same thing was true in the with the KPMG students. But here we noticed, for a similar question asked to them, do you see a role as auditors, as audit changing given recent developments in data analytics? Our KPMG students really believe that this is going to be the case, that the future of audit is changing. Then we asked them, do they think that we prepare them for that future? And of course, just like with the regular undergraduates, they disagreed, right? So we're not really doing a good job, they said, in preparing them for this specific part of their future. All right, so what do we do about this? So as Amir has alluded to before, there are a number of short courses around the place, and I'm well aware that the University of West Indies through CPDLL is offering short courses in analytics. So we have to do something about it, particularly as accounting and auditing educators. And University of West Indies is kind of taking the lead. I know about this because I've worked very closely with the Department of Management Studies there, and the University of West Indies is taking the lead in this. With regards to these short courses that they are offering with the CPDLL. They also have some postgraduate modules in analytics offered by the CPDLL. And there's a master's in business analytics offered by the Department of Management Studies, which I also help out with. And there are 2 courses in particular there, Data Mining 1 and Data Mining 2, that I help cover, that I cover. And these have been introduced in recent years to help try to fill this skills gap more generally among business students. At Durham, so as not to be left behind, we have introduced a new module, new for the academic year 2019-2020, called or entitled Big Data Analytics for Accounting and Auditing, being taught by Amir and myself. We also have a master's in business analytics, and we are seeking partnership with, we're developing a partnership with Reuters University, their Continuous Auditing and Reporting Lab, their CAR Lab. And Reuters offers a Audit Analytics Certificate program, which we are hoping to incorporate into our own into our own programming for final year students and postgraduates in accounting. So a little bit more about our course, Big Data Analytics for Accounting and Auditing. So Durham practices a terms-based system, so we're not semesterized like the University of the West Indies. So we still have 3 terms. So in term 1, Amir takes the course where he covers topics that include an introduction or understanding big data utilization and adoption, descriptive analytics, diagnostic analytics, prescriptive analytics. Amir also covers prescriptive data analytics, artificial intelligence concepts and applications, visualizations using heat maps. And here I think, Amir, we're bringing, this is at the point where we're bringing the team from Tableau. So some professionals from Tableau come to our class and they present.
Yes.
Mm-hmm. Data storage security and ethical considerations. So these are the topics that Amir covers in the first term. And then the second term, the topics covered by me: machine learning for big data analytics, an introduction to linear regression, introduction to logistic regression, artificial neural networks, support vector machines, association rules, and clustering using k-means, and principal components. So these are the topics that we cover. And you might think that for accounting students, this might be difficult, but they loved it. So these are some of the acquired skills. So acquired skills out of our specific module. So at the end of the day, our students have data analytics skills in Stata, which Amir covers, Python and MATLAB, which they do with me, data visualization and presentation skills in Tableau. And these hard skills that students leave the school with are well received by their employers. The KPMG students in particular really appreciated going through this course in the final year. And here are some of the comments that we received. So it's still too soon to have the student evaluations back for this year because, well, this year was going very smoothly and then COVID happened. But so it's a little too soon to have those that feedback yet. But on the final paper, our students had to prepare. They left a lot of very nice acknowledgements to the staff of the basis of the big data analytics class. Many of them thought that this was the best course that they've done in their entire time at Durham University. I don't know if they said that just to be nice and to make sure that we give them a good mark on their paper, but we'll take it. Right. So this is our feedback so far. The course is very well received. Accounting students appreciate it, particularly the auditing students, the professional students that we had in the program. They really love the course, and while the subject matter might seem challenging, they come up to speed relatively quickly. And I also know that at the University of West Indies in the Masters in Business Analytics, the 2 courses that I cover, Data Mining 1 and Data Mining 2, also reflect some of the information that I teach in the second term of Big Data Analytics at Durham. So the 2 courses are very similar. And so you guys have courses at University of West Indies which covered or touch on this subject matter. All right, so in conclusion, auditors, accountants, and accounting educators so far have been reluctant to use big data techniques. And one major reason for this that we've observed in our discussions with them and throughout the literature is that these techniques are perceived to be too far ahead of clients and their wider practice. You know, it's not in practice, so educators aren't really delivering it. The standard setters aren't requiring it, and so you know it's far ahead of practice. Also, clients aren't practicing a lot of these techniques, and so auditors and some accountants tend not to want to go too far ahead. We don't think that this is the right approach, particularly for auditors who have been in the lead when it comes to analytic techniques, and there's some very low-lying fruit for auditors with regards to big data analytic techniques that could be applied very readily into the audit profession. So we think that this is the way forward for that. All right, so we outlined some possible application areas of big data analytics in auditing and in accounting. And finally, we point out what we're doing to advance accounting education in this area. All right, so thanks. And at this point, if there are any questions, please feel free to ask.
Terry, Amir, are there any questions? You have stimulated, you've given such food for thought that the chat is replete with questions, comments, recommendations, and some feedback expected from you. So I hope that you are not tired as yet, because we do have comments and questions in the chat. So we'll start with one from Jamie, who asks if there are any success stories which you've seen in business. It's a change in mindset and persons are constantly looking for real life examples. So if you can provide from your own experience, where is this happening, and any of the success stories of how data analytics is really being used to enhance auditing from where you sit.
Amir, you want to take this one?
Yeah, I'll have a go. So thank you very much for the question. Is just to make it clear that when you, as an audit firm, when you do audit analytics, it's not just your own decision as an audit firm. So it's not just KPMG or EY or PwC or Deloitte sitting there and saying, yeah, I would like to do audit analytics. It relies on other factors. One of them is the client's internal control. And this is the challenge at the moment with most of audit firms. So for example, I'm having this with PwC, they're having something called Halo, and EY is having something called Canvas. And this system, the problem is when I'm speaking to all of them, they say, oh, yeah, we're fine, we're having our systems, but in order for this system to work efficiently, we need to tie ourselves to the company or the clients. So in one case, which I remember, I will not mention the name because it's confidential, but in one case in the UK, it was one client of PwC. And PwC will say, we'd like to apply Halo, which is similar to Clara. It's more about artificial intelligence tools and analytics, and say, we would like to apply that in the audit for your company next year. And actually the company say, yeah, we'd love to do that in our audit and make our life easier. So in this case, they ask, okay, let's just look at your internal control system. And what they done at the end, they say, okay, unfortunately, your internal control system is not able to cope with our Halo system, which is like Clara and KPMG, because the data being entered to the system in a different way, so it will not cope with our system. So what they've done is that they provide them with something alongside audit with another service called Technology Infrastructure Development Program. And this is what means that they work with them for a year and trying to develop the system in a way that this system can feed all the transactions or all the financial facts into the Halo system, which is the PwC data analytics platform, in order to feed, and it works very nicely. So it's worth the investment. So in this question, I'm just going to give you an example how it works. It's not just about me as an audit firm would like to run it, but I need to get the client to do it. So that's an example, it changed their mindset. But the interesting thing, that feedback came out of this process after I think the first couple of years of audit, they said that given that this process, we think that it was worth it because the data we get from these systems provide them different insights and helps for decision making. So it improves the decision making, make it in a more timely manners. Sometimes to take decisions, you need data, you need information, and sometimes this information or data might not be available on time. So in this case, you begin to work on assumptions. And when you start to do assumptions, you be very cautious with the decision because there is always some level of risk when you're doing assumption taking decision. But when they use data analytics, because they are more factual, they are more objective based, the decision being taken was more confident. And they take more decisions, sometimes might be with radical decisions to take, but they take it with confidence. So I think in answer to the question, Jamie, it changed the mindset in terms of being more confident about the decision, taking decisions that might not be taken without this type of information, without type of insight, like the example I've mentioned, which is relevant to audit, but they took the information, they took this experience into different direction for enhancing decision making. And I hope this answers your question about a real type of mentality change question.
Yes. Well, Jimmy, I don't have an answer to your question with regards to audit. Amir is closer to the audit profession here in the UK, so that's why I told him to take the lead on that one or ask him to. but with regards to accounting more broadly, I do know that, for instance, with regards to loan loss provisioning, there are examples of in Barbados where with the onset of, say, IFRS 9, internally developed provisioning models can in fact be more accurate and lead to less provisioning against, let's say, doubtful accounts than models that are developed by outsourcing. And this is not to suggest that the internal model is any less accurate. In fact, it's probably more accurate, even though it's smaller. So there are real benefits to applying, the real success cases in accounting in general of applying it internally, having the accountants have the wherewithal to develop these internal models to provision against doubtful accounts. Since the accountant at the firm understands, and the accountants, they understand the risk profiles of the firm's clients better than any external entity would, and therefore would be able to mitigate the risk associated with the, say, loans in a better, understand the risk associated with the loans in a better way than an outside party. Right? So that's one success story. So we've had a case like that last year. Some clients, well, some financial institutions in Barbados, they implemented their models internally, and they were able to provision less than those other financial institutions. Right? So that's it.
Thanks both Terry and Amir. You may have answered Samantha's question in part, but I will read it still. At what point should a business utilize auditing analytics, even if there's no suspicion of fraud or looming bankruptcy? And does it vary for the type of business, whether it's educational, charity-based, and so on?
Yeah, that's an interesting one, because I think, I mean, the provision, I mean, historically, when they use technology, they're saying, okay, to pick the abnormalities is to ensure that we're having some forensic investigation of any abnormal transactions. However, it's more about now different stages. So for example, the engagement stage, just before even engaging with the client. Most of audit firms by I mean, standards require that you need to do a risk assessment for the client before even engaging, whether you're gonna, and take the decision whether you're gonna take on this audit assignment or not. Because be careful that any audit assignment is coming with a risk, and this is what we call repetition risk. And you don't want as an audit firm to put yourself in this risk unless you can mitigate it. So the first stage you use it is the engagement stage. It's just to assess whether, is it really manageable in terms of risk and in terms of my repetition to take on these audit, this engagement or not. The challenge we're always facing with this engagement, it is always very tight in time. So normally the clients will arrive now and say, okay, I need a decision whether you're gonna accept to be my auditor or not within the next few weeks. So analytics can help on this occasion, because you're not gonna, we've always been advised by standards, you need to go and visit the premises, see whether they have the headquarters. But I mean, I know one example, for example, before they go to visit, they set a drone to a farm. I remember with one of the companies with KPMG, they say, I would like you to come to our firms. Okay, they said, okay, we'll give you a drone. Can you please get it there? And we're gonna get the footage. So they got the drone and say, yeah, we can ensure now there is a farm, there's some cattle there, so we can do the audit. So first of all, they investigate whether the business exists or not. This is before even starting. Then going to the planning, again, there are two issues with planning audit all auditors face. First of all is time pressure, that whether we're gonna achieve this audit within the time limits we have. So again, analytics can do some time management modeling to understand whether we can do that. That's, I mean, all of that before even getting to the numbers. And the second thing we use as well, data analytics, is budget pressure. Budget pressure, sometimes you say, okay, we're having we are restricted by the fees paid by the client to the audit firms. So sometimes we say, all right, we've been paid this amount of money, we need to do more investigation, or we cannot do that because it will require more. We need to go back to the firm or the client and charge them more, which might not be acceptable. So the solution here is to use technology, because technology will be cheaper to run such simulation activities or such investigation to some forensic activities. So it doesn't mean that we're gonna discover anything, but it builds confidence. And actually, even at the end, they do the checks and balances of the audit. So they do some simulations through audit analytics in order to ensure that the decision or the recommendation we're making as auditors about a clean bill or unqualified opinion at the end is really we're 100% confident about that, or relatively confident, because there is no 100% confidence in that, but we're relatively confident about that. So it falls in different phases of the audit process until the communication phase, which releasing the audit report in different aspects. So it's not just about we have seen something wrong, but it might be something we need to raise, but it might be going on. And actually, one of the things which is growing now is most of the companies, I don't know the case in Barbados, but in most of the case in Europe now, most of organizations ask to provide what we call a sustainability report about the future of the company, which in audit term, we call it going concern. But in this case, we need to have more sophisticated modeling to understand our predictive tools to see how the company will go in the next 5 years. And there is a lot. I will not be surprised if that's coming to the standards very soon. That is going to be one of the essential requirements. At the moment, it's optional, but I will not be surprised if it's coming as essential requirement. And in this case, will not be able to do it without technology, because they need some predictive modeling into the future to ensure that we're having a sustainable business here.
Thanks, Amir. John and Diana are agreeing somewhat on the chat about this next point. What advice do you have to the supreme audit institutions, especially in the Caribbean, which seems to be behind in the investment in technologies like the way it is for the major auditing firms, especially during this time as we are leading the fourth industrial revolution? As COVID has catapulted all of us, every industry across every sphere, into using the technologies, what advice do you give to the audit institutions in the Caribbean? And Terry may be more familiar with these, especially as we are playing quite often to other larger jurisdictions.
Well, first have a website functioning so that I can pay my fees online and not have to be in the country. Anyway, that's by the way. They need to, far be it for me to advise or to beat up on our local institutions, but of course we just need to stay abreast of what's going on externally and try to adopt as far as possible the practices that are going on that are occurring elsewhere. It may be appropriate to look beyond the auditing profession externally and look to areas, closely related areas, such as maybe finance and economics, which are more engaging with these techniques. So yeah, because the audit and accounting profession in general is kind of slow. So yes, you want to engage with them. You really want to make use of the technologies that are available to you. So for instance, there really is no reason why you shouldn't be able to pay your fees online. And I know this would be a problem in Barbados, unfortunately. But beyond simple things like that, I'm sure that we're not using the technologies as intensively as we could. But beyond things like that, I would suggest looking towards the profession external to Barbados, and in particular, looking outside of the profession, looking at what's happening in finance, what's happening in other related fields.
Thanks so much, Terry. Diana, our colleague Diana, has a comment first and then a question. She's agreeing with you, Amir, from your point that you would have made, that data analytics can be used for going concern evaluations, but the determination of the audit reports, that is issuing a modified audit report, cannot be left to the data analytics technique alone. But this can often be a subjective decision and also based upon a number of variables, such as the business operating environment. So it may be used as a point to start the process, but should probably not be used in isolation. And you would have stated in your presentation that by the year 2023, more audit firms will be using DAs. However, if the auditors are skeptical, how will that occur? And what advice would you give to accelerate the adoption and the buy-in by the community?
Yeah. Okay, I'll start from answering the question from the video itself. If you go back to the video, you can see that there is interesting thing when in the video itself is that there is a lot of talking, a lot of human conversation, right? It's not just about data. Auditor, I mean, sometimes we forget that the principles of audit. Or principles of audit is have to be professional, skeptical about things, and to exercise professional judgment. That's the core thing. Unfortunately, that's not the case at the moment. At the moment, auditors spend on average 70 to 80% of their time either capturing data or tidying up the data to make it ready to begin to exercise their professional skepticism on this type of data. So what the technology is trying to do is to reduce this time and allow more time for you to exercise your professional skepticism, because this is the core business for you. Your role as an auditor is not to go back and forth and ask for data. That's not really your role, all right? The data is supposed to be there. That's supposed to be as a given. Secondly, you're not required to stay there and spending large number of hours, which I'm training lots of auditors, spending large number of hours in the office and asking what you're doing. Okay, simply tidying up the data, all right? That's the role of technology. So role of technology here will not replace your professional judgment, because we need that. That's still human. They still need to have some professional skepticism there. But technology will help you to free some time, because time pressure is crucial, free some time for you to have more time to think carefully and to exercise your professional skepticism and professional judgment properly. Because what we're seeing now from the collapses, from the bankruptcies, from the issues we're seeing, that the auditors was not having the intention to manipulate the public, but they were not having the time or the capabilities to assess. Be careful, businesses are very complex and they're getting more and more complex. But on the other hand, auditors are still stand still. So how you as an auditor, like for example, imagine you're auditing Apple with multiple subsidiaries everywhere. How are you going to audit that without a proper technology tool to capture the data, analyze the data, and give you the time to look at the data and make the right judgment, to look at certain spots, we call them forensic spots, that you can investigate further because they might be worrying, and so on. So the idea here, technology is not replacing auditors, but is complementing what auditors are doing by releasing more time to them to focus more on the core business of an auditor, which is professional judgment and exercising professional skepticism. So that's the idea of technology here, is not relying it. But again, it puts you in a better position. And I've seen both situations. Some auditors relying very heavily on technology and some are not. The ones relying heavily on technology, they're having better understanding of the business they are auditing, better understanding of the decision they made, and better confidence on the opinion they released in the final stage of the audit. While those are not doing technology, they very coming out of the audit process very tired, exhausted, and just all what they have in mind, just get it off the way. I've seen the two scenarios, all right? And actually everyone, and I assume some of you work in audit, you can imagine what I'm saying here. We're spending a long time of hour struggling with phone calls. Can you get me this receipt? Can you get me this document? These things was supposed to be given. And unfortunately, the standards are making this assumption. When people set the standards, they assume that all the data was there, which is not real. And that's why there are always some frustration from the auditors to with the standards, because the standards are set based on the best case scenario, not the real life. And that's the challenge here. So that's my view about this thing.
Yeah, and just to reiterate what Amir is saying there, so is it the big data analytics models are tools? So they're definitely not supposed to replace the auditor's judgment at all. They're supposed to be used as support and tools. And so for instance, and it's very useful. So consider the case of a small audit firm who has a large client, right? And you're going to give them this modified opinion. Right? You as a small firm, you want to convince that client that you've done a good job and this modified opinion is justified. One way to support the opinion is to provide them with some model that says, okay, well, given certain parameters, you qualify for this modified opinion, and that can help to convince the client that yes, things here need to change at my firm, and I need to be strict on my internal controls or whatever. And in that moment, the client is not thinking about changing the auditor because the auditor has done a bad job. the client is more convinced that the auditor has done a good job, the opinion is justified, and that also enhances the auditor's independence to use their professional skepticism and to use their professional judgment in putting forward these opinions that clients might not like. So it's a tool. That's all it is.
Okay, thanks both Terry and Amir. A couple of questions now coming out about the incorporation of the new competencies and skills into the training and the recognition of that training. So Tristan asks, are there any designations that incorporate accounting/auditing analytics? And I don't have a name, it's coming from a Galaxy phone. Do you think the development of this area will create opportunities within audit and even accounting firms for in-house data analytics specialists to help facilitate internal training and progression in the data analytic field? So both of them really are talking about the upgrading of skills and the recognition within the profession of this new emerging space within the competencies and skills that the auditors will have.
Like me to start first, Terry?
Yeah, but go ahead. I can take the second one if you like.
Yeah, I mean, this is a very interesting question about how data analytics. There's two ways of teaching technology in general. To make it more contextual, I mean, to build it in the context or the discipline you are studying, like accounting. So make it part of it, like the thing I'm doing myself and Terry in Durham, where we start, okay, we're not teaching a technology module. We inhabited into, or we embedded that into an accounting module or auditing module. In the US, for example, there is something called Master of Accounting and Analytics, which is hosted by KPMG US. And there are about 8 universities delivering that. So if you type just KPMG Audit and Analytics, a program, which is 8 universities across the US. It started with only 2 universities and then expanded to 8 universities in the US who are delivering this thing. And it's focusing on simply how to understand accounting and auditing and user applications. One of the things we've tried, which I've been involved in the UK, is that we're having our professional bodies called the Institute of Chartered Accountants in England and Wales, so which is called the ICAW. So what we've done is that last year I've been asked to work with other colleagues from the UK to redevelop the audit and assurance curriculum, which is a national curriculum, and it's a national exam for anyone who'd like to be accountant in the UK. So one of my role was really is to introduce the idea of data analytics, cyber security, data storage, and fraud detection using technologies in the curriculum. So here what we've done is we integrated that into the paper. But came and then I remember after finishing that, okay, fine, the ICW was saying, okay, we're done, thank you very much, and you sent me very nice certificate and stuff like that. But the following question, how are we going to assess that? And I say, we didn't think of that. I told them, because be careful, I've wrote the curriculum, but you need to change the assessment. And they got no idea how that's going to be assessed. So I told them, unfortunately, it needs to be done through simulations. And they told me, and of course, simulation, talking about a professional body about that, it's a bit worrying. So I told them, don't worry. So I brought a company called Inflow, which is based in Durham, which, because I know them, and told them they have lots, something called a hybrid intelligence system, which we can use it for simulations. And that's it now. So from 2021, if any one of you guys doing an English qualification in the UK, he will be doing the audit and assurance, you'll be assessed via simulation, and Inflow, you're gonna have the title Inflow, which is the company provided the platform for any of these tests to do like a simulation exam rather than writing exam. So it's a different aspect, it's a different perspective, but again, integrating it into education is crucial. One of the things I need to be careful here, we're not looking to get out of these programs people who are programmers or coders. We're looking for people who can integrate, understand technology applications in the audit, accounting, and audit profession. And that's totally different. It's not, because it's very, very easy to cross the line to teach a program which is very computer science oriented rather than accounting and audit. So you need to be very careful. It's a very, very marginal space. You can switch. So you be careful. I'm not here to be a coder or be a programmer, but I need to understand how programmer is working, how codes are working to integrate it in my work as accountant or as an auditor. That's the target. And to be fair, it's not that easy, as I mentioned now, it needs a lot of work, but having computer scientists in a program like that to show the application will be useful. And that's one of the things that for example, Terry mentioned, we're having a business analytics program. This program is a joint program with the Department of Computer Science. So half of the modules are from computer science, half of the modules are business. And this is example how we engage or marry the two things, the discipline and the technical skills you need from computer science together. So our business analytics program is an example of this engagement. So that's my view about how we integrate analytics into accounting education together. I think Terry will pick up on the second bit.
Yeah, well, just to continue where you left off, to speak to the part of the question that was asking, so how can you go further? If you say you are an auditor and you invested some time in educating yourself with regards to data analytics, is there additional scope for you to enter into data, to become a full-blown data analyst? And the answer there, I think, is a resounding yes, because of course, auditors and accountants specialize in financial data, and we're living in a world where we have more and more financial data being generated, and this financial data is best understood by, guess who? Auditors and accountants, right? So at that level, you already have an advantage over any computer scientist or data analyst that doesn't have the accounting, finance, auditing background. You understand how the financial statements are constructed, and you also know where the, let's be generous and say, pit holes are, right? You also know where certain things can be hidden. So you have that background, that fundamental understanding. And if you can marry that with some basic, as Amir was saying, you don't really want to be a computer programmer, I'd say at the highest caliber, but if you can write a script in Stata, a script in MATLAB, a script in Python, a simple script to analyze data and produce a model that can determine whether, okay, this firm is probably engaging in earnings manipulation. Okay, there's a likelihood, given the negative sentiment surrounding this product, let me go and check the loan loss provision. If you're, say, a financial analyst of any sort, so this could be a financial analyst at a bank, with an auditing background or an accounting background, a financial analyst at an insurance company, a financial analyst in an internal audit department, right? So there's large amounts of scope, and given the accounting and finance and auditing background, if you are equipped with these additional skills, which auditors already have to varying degrees, because auditing is all about trying to detect whether there is a fraud, whether there is material misstatement of financial statements, to a reasonable extent, right? So you do have an advantage where that's concerned, and if you marry it with those additional skills, data analytics skills, there is a lot of scope in a lot of different areas, and not just in audit, but yeah, going forward into banks, insurance companies, wherever.
Thanks, Terry and Amir, for your interjection earlier as well. We just have two more, one question and the second more of a discussion, a small discussion going on the chat. So that was a segue into Samantha's question. Will there be a greater need, more so now, for auditing analytics in the era of the pandemic and going forward into the new normal with, I'm sorry, my screen just moved as we had one more intervention. With reference to fraud detection due to more online transactions and the possibility of hacking or transfer of funds to hidden offshore accounts. So now that we are going into this new post, dare I say with fingers crossed, post-COVID-19 pandemic era of online transactions and less face-to-face interactions, is there a greater need for data analytics and auditing?
I think she answered the question herself. Definitely, given that we're not going to be relying on these digital tools more and more to facilitate payments, to engage with the world. Because right now, this is probably 4 weeks, 5 weeks, or is it 4 months? It feels like 4 months. That I've essentially not left my home, but I've purchased a lot of stuff. I've had deliveries. I've engaged with a lot of businesses virtually. and there is data sitting somewhere in some server that contains all of the transactions that I would have had over the last 4 weeks. And there is possibility that that data could be breached. So we have concerns over data breaches, which auditors need to be concerned about now, because that a data breach for a firm like, say, we've had a number of data breaches recently from some online firms, and that has affected the going concern assumption of these firms, right? So these firms are essentially no longer going concerns because the clients are going to leave them. The U.S. government is going to launch an investigation, and they're probably going to find. The auditor needs to be aware of all of these things. So yes, I think that in the world that we're going on, this new online world, and the propensity that there is for different types of frauds and breaches, data failures, that the auditor has to be more acutely aware of these new technologies and the application of things like a model to assess whether there has been a data breach. For instance, say some Twitter daemon or some Twitter model that assesses the sentiment of Twitter of a company on, say, Twitter, to see, okay, well, is there an association, a high degree of correlation between this company's name and data breach? That's an early way, in some research that we've done very recently, actually, that's an early way to check that there's been a data breach. We've had some companies that Chegg had a data breach, and there's a whole host of companies that we've gathered some data for. And one of the first indicators that there was this data breach was, guess what, Twitter, right? So yeah.
Yeah, I think I agree with you, Terry, on everything. And one very final comment is on this point is, given the COVID-19 issue, there will be lots of pressure on all organizations to speak about their sustainability. And this is very predictive on the future. And given the future is getting to be more uncertain, using technology will be essential because it can model different scenarios, which we cannot do it individually, manually. We need to do that with technology. So there is lots of organization now, I know they are doing different simulations for different scenarios. You're looking at yes, we are gonna get out of COVID-19, but if COVID-19 stayed till January, what's gonna happen? What the financial profile will look like? And then if it's having another spike in September and then expanded to June next year, how the scenario will look like, and so on. And these models are very, very complicated and very, very sophisticated at the same time. So technology can help to make this kind of sustainability post-COVID-19. How are we going to get out of that? What are the financial implications so we can make proper financial decisions at the moment to hedge for any problems in the future regarding the post-COVID-19 issue? So lots of organizations we're seeing, at least in Europe, they're relying heavily on the technology to assess their situation coming out of the COVID-19. Lots of organizations now being enforced to use digital platforms to exchange transactions and to ensure that there is some kind of transparency, not just to their auditors, but all other stakeholders in relation to the transaction that's happening, because there are lots of suspicious. And you can see lots of things, for example, about information and transparency, for example, about the vaccine and the battle between Sanofi, GSM, AstraZeneca, and who's really the company which is going to offer the vaccine. So all of them doing financial modeling at the moment, who's going to be faster, and if you get the vaccine first, how much we get, and so on. So all of them using very sophisticated modeling to predict the future. So they say, making scenario, if we got the vaccine, what we're going to work like. If we didn't get the vaccine, how we're going to look like. And they begin to have some strategic tactics to get into consortiums with others because to hedge their positions. All of that based on data, based on technology to make these simulations and the outcomes of these simulations.
Thanks again. And one final theme has been emerging on the chat, that of costing. So it may seem costly to implement data analytics tools within the firm. And Diana, Jamie, and Corey is now talking about this on the chat. I will read Corey's comment. I know big data analytics are meant really for the larger firms, but do you think smaller audit firms would benefit from this somewhat costly technological investment, and would the benefits really outweigh the costs for the smaller firms? Diana had earlier interjected that the cost of transition might be high, although Jamie did reply that it would depend on how you're using the processes, and therefore if you are able to, you may be able to get savings in building processes which would leverage the original investment. So your thoughts?
Yeah, I can start. If you go back to my first early slides and talk about the 5 V's, about the data, big data, and one of the things is value and value added. Of course, I've started with a bit fancy video about KPMG and how it works, and you've seen all these fancy technologies, but it doesn't mean that every single audit firm or single organization need to apply that. It depends on the value. So you be careful, you're not doing technology for the sake of technology. What value added it will bring? And this needs to be done through very simple cost benefit analysis. Will having this technology will add value? How is it gonna be? Is it worth it? Is it feasible or not? So organizations need to be careful not to do technology for just the sake of technology, but it needs to add value. And these are one of the 5 key V's, key dimensions, which one of the 5 V's to implement big data analytics. So again, they can benefit, but be careful. It can benefit them directly, but you're not working in a bubble. You work with different stakeholders. So you need to look at, for example, who are your suppliers? What's the supply chain? Is the supply chain having this technology? Because it can go both ways. You might be very high-tech organization, but your supply chain is very poor. So you're gonna see like what's happening now. Most of audit firms, they're using 20% of the 20% of their clients are being accommodating technology so they can use Clara. So for example, Clara specifically, because I know the figures, only 20% of the clients they're dealing with, they use Clara for the analytics, and the other 80% they use traditional audit without them because they're not ready yet. That's why they think it's a 2023 plan, because they hope in 2023 majority of their clients will be using the appropriate technology for them. So you be careful, you don't want to invest a lot of technology. At the end of the day, your stakeholders are not engaging in that. So you see that lots of your technologies are not being really used after lots of investment. So that's what I mean by value added. You need to take it in a more holistic view. It's not just about what you're gonna be doing, but who are your clients? Are they business clients? Are they customers, individual customers? Who are your suppliers? Who are your lenders? Who are your investors? And then you see what levels of technology they use and what the best type of technology can accommodate that can incorporate these links with them in order to make sure you got the best value added and the best benefit of your implemented technology. And that's how I look at it to make it feasible.
Yeah, I agree. There are also some, so beyond Clara, which obviously is something that would be very costly to replicate if you're a small firm, there's some free actually and some relatively cheap analytical tools out there. So there's R, which is perfectly free, and R actually is cutting edge in terms of an analytical tool, because some of the best econometricians and statisticians in the world put packages on R every day. So R is a one statistical tool that is free. There's Python as a scripting type language. It's also free, and there are a lot of packages for Python. So if an audit, a boutique audit firm, the small audit firm, if financing is a constraint, then maybe instead of investing in, say, Stata, which you have to pay for, maybe MATLAB license, which you have to pay for, then maybe you seek alternatives like R and Python, and you try to develop the analytical skills there, right? And to the question as to whether a small firm could benefit, I think a small firm can actually benefit more than the larger firms, because the small firm can always fall back on these models to support their opinions and to increase their independence. So I think relative to a larger firm, maybe the small boutique audit firm actually has more to gain from implementing these type of techniques, being more nimble, being more able to adapt to your client needs, both in terms of audit services and regular accounting services and regular consultancy services to firms. You know, you have more to gain. You can increase your independence as auditors by having models to fall back on to prove to clients that yes, this opinion is justified. You don't have to feel pressured into giving on unmodified opinions. And also in terms of your regular consultancy services, being small actually makes you a little bit more nimble and dynamic in implementing these techniques, models, and applying them to your individual clients.
Well, thank you both, Amir and Terry. Any final words as we wrap up today's session?
Well, thank you, Sonia, for having us. I look forward to seeing you guys soon, or as soon as possible. I don't know if Amir has anything else to say.
I'd like to thank everyone. I'd like to thank the comments are really, really interesting and constructive, and it's good to see how people think about this new agenda. But I hope everyone enjoyed it, and thank you very much for the invitation, Sonia.
Yeah.
Well, thank you again to our wonderful presenters. I think you did an excellent job, and you have definitely stimulated interest in the area. There are a lot of thank yous coming in for an informative session, and thank you for sharing. And even Samantha said that you've now solidified her interest in this area, in this field. So I want to thank the audience for spending the last hour and a half with us in this third of a 5-part series offered by the Center for Professional Development and Lifelong Learning. What you're seeing on your screen now are the 2 remaining webinars in the series. Next week we have, but this one is on a Tuesday. We normally have the sessions on a Wednesday, and that's why I highlighted that next week's session is going to be on, the next session in 2 weeks will be on Tuesday, June 16th from 11 to 12:30. And Dr. Gareth Beeston will be talking about digital business. And then we end the series on Wednesday, the 24th of June with a topic which is focused on cybersecurity. The Center for Professional Development also has several short courses, and we have a special running now for the ones that you see on your screen. We invite you still to visit our website, which is kphil.ub.edu lifelong learning, so that you can see the full suite of courses that are on offer. As you can see from on your screen, the offerings do include 2 courses using Microsoft Excel about data analytics. So we have data analytics using Microsoft Excel, the intermediate session, and for those who may have already gone through some previous training, data analytics using Microsoft Excel for the advanced session. And as Terry pointed out, R is a great foundation on which to build your own models, and we are exposing you to that data science for business using R. For the more general view on business analytics, there's also one of those short courses called Business Analytics, and you'll see more and more of this coming out in the suite of offerings through CPDLL for those who want to retool and get exposed to the new environment and the new tools that will take you into repurposing and maybe rebuilding your professional futures and even your personal futures as well. So with that being said, I want to thank each of you for attending today's session, and we look forward to your continuing engagement with us. You will be receiving a follow-up email to provide us some feedback about today's session, and inviting you also to identify areas that you would want us to engage on with you in the future. So thank you again very much, and we look forward to seeing you soon.